Welcome to another amazing episode of Raising Private Money. I'm Jay Conner, the Private Money Authority, and you're a host of this show. This is the show where we talk about attracting and raising private money without ever having to ask for money. Well, my guest today has got a plethora of experience. He's only raised so far between $250, $300 million in private money. You think he's got something to share on how to attract money? You better believe it. He's got over $250 million in real estate transactions under his belt. And, there's all kinds of real estate assets that you can invest in. Well, my guest has identified mobile home parks and parking lots as one of the top real estate investments with what's going on in the current market. Can't wait to talk about those asset classes. And in addition to that, he's got a private equity firm that's called Sunrise Capital Investors. So this is where he makes investments in commercial real estate assets, and he makes it available to passive investors that just want to sit back and collect nice checks to help them build legacy and achieve financial freedom. In just a moment, we're going to dive deep. I'm going to interview my good friend and guest here on the show, Mr. Kevin Bupp, right after this.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Oh, my lands, Kevin, for goodness sakes, hundreds of $millions in private money you've raised, hundreds of $millions you've been involved in real estate transactions. This is going to be a phenomenal show. Welcome to the show, Kevin.
Jay, thanks for having me. I'm excited to be here.
I'm excited to have you too. And I tell you what, when I grow up, I want to get a microphone like you. I mean, for all of you that are listening, Kevin is like speaking into the golden mic. I don't know if he's related to Rush Limbaugh or not, that had the golden microphone as well.
Well, you know what it is, Jay? I'm not cool enough to be able to pull off nice bling like you have on your wrist and your fingers. And so this is my bling. This is my gold bling.
Oh, I got you. Well, you see, I wear the bling because it reminds me of when times were good.
Yeah.
Just kidding. So, Kevin, we're going to talk about how you've gone about raising private money. We're going to talk about your Sunrise Capital Investors Fund, where people can actually be passive and get nice rates of return in a conservative way. But my first question, Kevin, you can answer this as quickly as you like, or you can take as much time as you like. And here is the question. Tell me and my audience, who is Kevin Bupp?
Yeah, great question. So, I'm 46 years old as of this recording. I like to joke and say that I've never had a real job. I've been in real estate since the age of 19. That's when I first identified the opportunity, bought my first rental property at the age of 20, and I've been doing it ever since. It's taken many different life cycles throughout the last 20 plus years, but ultimately this has been my bread and butter. I've owned just about every different asset class to speak of, both in the residential world as well as the commercial world. I've owned a number of other companies outside of real estate, but real estate has always been the core focus. And so I started off just like a lot of other folks, buying single family properties. In my early 20s, had successfully built up at that time, what I felt was just like, I thought I was God. I had 122 single family rentals by my mid 20s, was making quite a bit of money, having a lot of fun doing deals, found my way into commercial real estate as well. Lost everything in 2008, started back over again. Fast forward a couple years after the crash, started buying mobile home parks, which was a brand new asset class for me. We've scaled that business significantly here over the last decade, and then just in the last 5 years, you mentioned parking lots. That's somewhat of a new vertical for us, but one that we've got about 150 million of parking lots in our current portfolio today. So those are really we like to stay our lane, Jay. We love finding what we're really good at and then just going all in. And so mobile home parks were that again for the last 10 plus years. And then parking, we brought into the fray just about 5 years ago. And that's the only thing we do. Those two asset classes are what we focus in. That's where expertise really shines. And we have a lot of fun doing it as well. So that's a short condensed version of me.
Sure. You said having a lot of fun. I tell you what I believe, and that is life is too short not to be having fun with
Yeah.
what you do. I'm starting to get to the age, Kevin, which you have not as of yet, but I'm starting to get a few people ask me the question, well, Jay, are you thinking about retiring? And I'm going, are you kidding? What in the world would I do with myself? I don't play golf. I don't watch much TV. And so I say you might as well be doing something fun and getting paid a lot of money for it. Now, you,
Right.
like a lot of other people, Kevin, you lost it all, quote unquote, back in '08. '08
Mhm.
was actually '09 was my pivotal moment. But if you had it all over, have you had to do it all over again? What would you have done different? What lessons did you learn from having to go through that? And then thirdly, how do you rebuild a real estate empire after losing it all?
Yeah, all great questions. Back then, the majority of my portfolio that I ended up losing was single family rentals, and it's not a. I mean, it's a great asset class. However, there were some additional factors and variables that existed back then that don't quite exist today. One being everything I owned was here in South Florida, Southwest Florida, to be more specific. So Tampa and then South. You know, the economy here is much more dynamic than it was back in '08, especially once you get outside of Tampa. It was much more it's much more dynamic today than it was 10 plus years ago, or back in '08 when the market crashed. And so essentially what occurred was, number one, there was an excess supply of a surplus of new homes being built. I mean, it was, builders were building homes as fast as they possibly could, but there weren't necessarily bodies coming into those homes. There weren't that much of a population moving here to Florida. And second to that, a lot of the job base was built around construction. So ultimately, when the mortgage market crashed, so did everything else, and there weren't enough bodies to occupy units. It was basically robbing Peter to pay Paul. So we had a major vacancy issue that came about. We were competing against brand new homes that were sitting on the market that builders started renting, and so we had to cut our rental prices. And so we went from having positive cash flow to having negative cash flow. But on top of that, Jay, just to answer your question, but to better answer it, there was a lack of technology back then that I believe exists today that makes even operating individual single family rentals much more efficient than what it was back then. I had properties in 5 counties. I had leasing agents running around. I had maintenance guys running around everywhere. Lots of inefficiencies just in that alone. You couldn't do virtual showings. You had someone showing up at the unit to do walkthroughs and things of that nature. It's just the property management side of it just absolutely was crushing. And so while I argued with my internal self that I truly was a cash flow investor, when you really got down to the honest brass tacks numbers, it was really an appreciation business. And when the appreciation stopped, so did everything else. And then ultimately, when rental rates actually dropped, a lot of people say rental rates don't ever drop, right? They only go up, and that's bullshit. They absolutely took a hiatus for a couple of years, especially in some of the hard hit markets of Florida. And so, I would say, what I've done differently, it took a lot of time and energy. And I was single, I wasn't married, I was having a lot of fun, right? But it took so much time and energy to build that initial portfolio one by one by one. And it was fun. I love the hustle, but it's kind of how do we rebuild this again? How do we do it more efficiently? And how are we smarter with our time, right? Because now the second time around in '08, I met who is now my wife. We didn't get married till 2010, but I knew that, I knew she was the one, knew we were going to have a family. And now my time needed to be split, right? I need to try to find some type of balance while also rebuilding something from scratch. And so I originally thought it was going to be multifamily. I'd started buying some larger multifamily properties before the crash happened. And I just found a lot more efficiencies in the overall operations that didn't exist in that single family stuff. Debt was also quite a bit more attractive on the larger multifamily properties than that of individual single family properties. And so when I first came out of this thing, it took me about 3 years to really get my head out of my butt. I was dealing with a lot of chaos, a lot of damage control for 3 years, just trying to sort through the mess. But when I came out of it, I had originally decided that multifamily was going to be it. Because I was like, okay, well, it took me this long to buy 122 units, but I had a couple apartment complexes, one that was 70 units, right? Literally, I bought that in one fell swoop. And it took me multiple more years than that to acquire these, or, compile these 122 single family. So I thought that was going to be the path. And then I accidentally stumbled my way into a luncheon conversation with a gentleman that happened to be a retired banker that decided to start buying mobile home parks in his retirement years here in Florida. And I had a 2-hour conversation with him, and that changed the trajectory and basically brings us to where we're at today, right? Like I decided not to buy multifamily. I decided to buy mobile home parks. I went and bought the first one, and really the rest is history. And it's been a bump